Hello guys, welcome back to River channel. So today I'm going to record an English version, and I'll be uploading a Chinese version of these video, to my YouTube channel. So this episode I'm going to talk about a little bit of what happened, recently. We have these market turmoil. So a lot of people been asking me, what's my take on the current situation that we're actually witnessing, 10-year bond yield rising, and then at the same time the major index were down massively. But now we can see it's a great opportunity to long the dip, because basically that was a huge drop because of the Tesla was being massively sold off. So since because Tesla was part of the index, which is the reason why the entire index was plummeting last week, as we can see. So which is the reason why S&P really kind of affect the Chinese Shanghai Composite Index. And so we're seeing these China and US, both of the index was were dropping simultaneously. That's basically what we have encountered last week. So basically in this episode I want to talk about a little bit of my opinion of that. Okay, so basically if we look at, first of all, I would like to talk about do we really have inflation or not. I mean, of course in the financial market is a place where people have these expectations, and expectation really kind of motivate our kind of behaviors, right? All these expectation will really kind of shape our behavior, which is a very important concept brought by Mr. George Soros. He was, in his book, the very famous one, the very famous book, The Alchemy of Finance. He was, basically introducing his concept of reflexivity. Reflexivity is a concept where your perception and expectation will end up influencing your behavior, and your behavior will actually form another expectation, which is going to affect the asset price, as a matter of fact, and as the consequence, naturally. And that, of course, is a chain of events, right? Because we have all these expectations, and then we are, every one of us end up betting on maybe copper, maybe oil, and whatsoever. And then that creates another loop. And so a lot of people follow this trend, and then the asset price of oil, the asset price of copper increases, right? And then that kind of price reinforce back our behavior, because we think, okay, we're looking at all these asset prices, a great opportunity, potentially we can make some money out of it, so let's go and trade. So that's how these chain of events gradually reshape our society. So basically that's Mr. Soros' concept of reflexivity. I always have these difficulty pronouncing this word particularly, so I'm really sorry. I do apologize if if I can't pronounce it correctly. Anyway, because of that concept, what we're seeing is the asset price, early priced in all these expectations out of inflation, because people think there will be inflation. That's why it further motivate the asset price, and which influence people back, and and it's a process of leveraging up, right? So we're seeing the entire U.S. economy system is, repeatedly fuel itself with more and more leverages. And these leverages, which is the second reason I want to talk about, and the second opinion that I want to talk about, which is like the excessive liquidity injected from the Fed has causing another huge issue, right? Because the Fed was trying to save the market. The Fed was trying to save the economy system, right? And they have a theory. They follow that theory, right? Tyler rule. They out of the belief that they should save all these employments, and then in the same time inject inflation back in this financial system. So that's why they protect, they bring out all these liquidity facilities. They brought out all these kind of policies, and then end up injecting excessive liquidity to the financial system. And think about this. A lot of people, they stay home. Of course, you have to bail them out. You have to bail the people out because it's, taxpayers' money. But the problem is they have nowhere else to spend their money. I mean, a lot of places have been locked down. So that means a lot of people are getting bailed out from the government, free money. And then they will just take that money and register a Robinhood brokerage account and start trading in with maximum leverage, because obviously Robinhood was trying to give cheap leverage. I think it's kind of free leverage to its retail investors. So it ends up a lot of people are doing so. We're doing so. That's the problem. That excessive liquidity has caused excessive amount of force of speculation. That speculating force really becomes like a game changer. Okay, so the third opinion that I want to share is I'm a strong believer of I think the modern MMT modern monetary theory is flawed in its nature, because they all end up believing all these fancy formula and all these fancy equation of how if you lower the interest rate, you'll be able to help the economy because you lower the interest rate. Yes, lower interest rate really helps in some way, but when you have a global Japanification, where every central government on this planet are trying to have a neo-zero interest rate policy, that's horrible. And then if you actually think about that actually brings another impact to current Japanese yen though. The Japanese yen, however, was considered to be a very important hedge, but right now can see a very strong divergence between Japanese yen and its performance correlated to S&P, right? Because most of the time we think if the market plummets, Japanese yen will spike, but apparently we're seeing the opposite. We're not seeing the opposite, but we're not seeing Japanese yen. The asset price was nowhere near as it used to be, right? It used to be a great hedge, but right now it's no longer the hedge because every other nation are doing these zero interest rate policy, and then that just simply makes Japanese yen not as cheap as it used to be. So that's the three opinions that led to my conclusion, right? So we have these excessive liquidity, we have these QE fear situation, and we have government trying to bail out these people but end up failing. So what do we get now? We get a crazy inflation kind of scenario, and that crazy inflation, that kind of scenario is very fragile. So I'm actually expecting a larger market correction in next year. We're probably going to see a larger amount of correction from the market, right? We're going to see perhaps like 15%, maybe more than 15% of market correction. That'll be huge. That means a lot of tech companies are going to lose its current value, and a lot of companies will be forced and then go back to its previous value, which will create a great buy opportunity for a new investor to get inside the market, because that would be a great turmoil, market turmoil, but at the same time would be a great opportunity, because these leverage simply could not, it simply cannot continue. So that's the case, right? I mean, like right now what you're seeing is of course US economy is somehow I'm always like a criticism, like I'm always skeptics on both sides. I'm a skeptic on Chinese economy system. I'm also very skeptic on US economy system, because both of these economy systems are considered to be fragile in different ways. So, Chinese real estate bubble is like a super Ponzi scheme, right? But we were talking about Fed, that's like a super ultra Ponzi scheme. Like human society in its nature, it's Ponzi scheme. If you know a lot of finance, that's how it goes. Anyway, that's my view to the market. So you better hedge out your position in the long term. And I hope you guys enjoy your trading. And I'm hoping that I can make better quality video next time. But I'm really happy to share my opinion with you guys. Please subscribe to my channel, and please like and share, and put your comments on the section below. And please do press that little bell for me, so you will get a new update every time when I upload a video. Okay, so thank you guys for watching. I'll see you next time. Bye.